traders, I'm back again with another video, and yes, it's been quite a while, so I guess I have a lot of catching up to do. So let's jump right into it. I'm going to start off by telling you, traders, it's really important to understand about over trading and being in the market. Really, traders, being in the market is not a great thing, because being in the market, that's like just jumping in the water with sharks. Okay, so you want to make sure when you jump in the water you know where you're jumping, so you don't constantly just jump in the water and not be aware of your surroundings and what's going on. So that's the same thing with trading. Okay, you want to make sure that you're jumping in the right spots, that you're taking high probability trades, and that you're watching your risk management. That's basically the main things about being a successful trader, along with a few other things such as discipline and patience. It's not all about the setup, but I'm going to show you some good setups and some of this Ichimoku stuff right now, so we'll jump into it. um, Myself, I've only made 3 trades this year. Actually, I've made 2. One trade closed this year, and I opened it up last year. So when it closed this year, that was a losing trade. It was the Aussie New Zealand dollar. It wasn't even an Ichimoku trade. It was a bounce off of the all-time low. So it wasn't an Ichimoku trade. I lost that trade. I only lost 46 pips. And then I got into another trade, an Ichimoku trade, and I was 175 pip profit. And then currently this trade that I'm in now, which is a Cad Yen, I'm in profit of 209 pips right now. And I want to talk about this trade and then show you a couple other setups that are developing right now. So the Cad Yen trade, this trade, you could see here we had a Kumo breakout. I didn't get in on the Kumo breakout, so we had price continue to follow this trend line, which is our Kijinsen. Our Kijinsen is like a trend line. So basically you just trade that just like you would a trend line. Okay, price moved up to my trend line, I traded the bounce, and I continue to stay into the trade. Okay, so I'm following my trade. Now the good thing about this trade, let's go to the daily time frame. This is the 4-hour time frame. Let's go to the daily and I'll show you what this is. All right, so let me take these off of the chart, remove these. Okay, so basically we have a Kumo breakout here on the daily time frame. This closed and we got a Kumo twist, so you got a Kumo breakout here. So that Kumo breakout, I got into that before the breakout because I traded the 4-hour time frame, and it wasn't a breakout then. It was this bounce off of this Kijinsen line. All right, so I got into that trade. Now this got me into the trade early, and I was able to follow it down to this level here. This blue line is representing my daily Kumo. So I know that when price got here, this would be a level of support, quite possibly. So let's go back to the daily and see. We entered here, then price moved down. We're down to this level here. Now we want to see price continue to move and show some strength down here. But it looks like on the daily that price is stalling here. You can see this little doji at the current time, but we still have a good 3 hours and 50 minutes, almost 4 hours before this candle closes, this daily candle. And to top it off, let's see how far we are from the Kijinsen. A lot of people don't realize, but you don't want to be that far from the Kijinsen. So we're 375 pips from the Kijinsen. When price is far from the Kijinsen, it's bound to retrace because the level wants to get back into equilibrium. Okay, so we're going to see what happens here. We're going to follow this candle out, and we're going to hope that this level here holds resistance. If this level holds resistance, I can stay into the trade. If it violates this level and comes back up into the Kumo, I probably want to get out. So therefore, looking at my 4-hour time frame, if I get a close above this blue line here, I probably get out. Right now my stop loss is here. I started with my stop loss at this level here, and I continually move my stop loss down with my Kijinsen. And here's Kijinsen. I'm a little bit above Kijinsen, so currently 211 pip profit with this trade. All right, so that's Cad Yen on the 4-hour time frame. Let's go to Aussie New Zealand dollar. Aussie New Zealand dollar, this was the one that I lost earlier this year. Actually, I opened this trade before the year opened, and I was trying to play a bounce off of this level, and then price made another low. This was the all-time low at the time, so I took a bounce off of this level, and then price went even lower. But now if you follow Ichimoku, Ichimoku will really help you to get into a good trade early. Okay, so I want to show you what we have here. So now following Ichimoku, we can see that we had a bounce off of this level, this all-time low, and then price, what did price do? Price came up and broke this level. And it also broke our Kumo. So we had a Kumo breakout here. We have a twist here. So your future is bright. You need a bright future. You need a crossover. TK crossover is bullish. So we have a bullish crossover, bullish future. Price is bullish, being above the cloud. And I do not have my Chiku span here, but Chiku span back 26 periods ago would have been above price of the past 26 periods ago. So let me put that on the chart just so you guys could see that. So we want to make sure everybody understands what we're doing here. So when we took this, if we would have taken this trade back here, price was above the Kijins, above Chiku span was above price for the past 26 periods ago, which lets me know that price is moving higher because we're above that price previously 26 periods ago. If we're in that same level of 26 periods ago, then we know that we're in a range, right? We haven't moved up, we haven't moved down, we're pretty much in a range. But we moved up. Here's price at 26 periods ago. We moved higher. So that tells us that the momentum of this asset is bullish right now, and that price has moved higher within the past 26 periods. So we had our breakout here, and now we want to be aware of this level here. This is the daily Kijinsen. So you go to the daily time frame, look at that daily Kijinsen level. Here it is right here. So when price gets here, we may expect price to stall, or else price will break right through. This is sometimes going to be a support and resistance level for you. So if you're in a trade, you want to be aware of that daily Kijinsen level. Also your 4-hour Kijinsen level, whatever time frame you're trading, that level, you want to be aware of that Kijinsen level. But I'm always aware of the daily Kijinsen level also. Okay, so if you're in this breakout trade, you could see we had a breakout here. So we had a Kumo twist that was bullish. Future was your TK crossover was bullish, your future was bullish, and your Chiku span was bullish. And then price being above the cloud, breaking above the cloud, that's bullish. So you run this trade, and then you're aware of this level. You want to see if you can break that level. And if you break that level, you just let this trade run, and you follow with your Kijinsen. Now, there's a lot of ways to take profit. I'm not going to get into taking profit and where to set your targets and all that right now. I'm just talking about entering a trade right now. I have so many other videos on here that'll tell you about taking profit. There's so many different things you can do about taking profit. One of the good ways is you could follow Kijinsen, but see how far away Kijinsen is from price right now, and you have this much profit, and then price may retrace all the way back down here, and then you lose that profit. So we're not going to talk about following Kijinsen right now, because a lot of times when you talk about following Kijinsen, you're not talking about following Kijinsen with just one lot. You have to have multiple lots on the table so that you can take some of your profit. If price happen to move up to this level, maybe I take some of my profit off the table, and then I let the rest run and follow Kijinsen as my stop loss. All right, but if you're playing with just one lot, then you probably don't want to do that, because you're allowing all your profit to come back and you're losing all that profit. So we're not going to talk a lot about really taking profit. We just want to look at these trading opportunities that have developed. All right, so that's Aussie New Zealand dollar 4-hour time frame. Let's go to Euro CAD. Euro CAD is setting up really nice right now. Okay, you can see we've been in a downtrend, then we broke this trend line. We broke the trend line and price continued higher, and then we had a Kumo breakout. At the time of the Kumo breakout, let's see what happened here. 26 periods ago, it looks like we just had the bright future. This was the twist right here. So 26 periods ago, this is where we were happening right here. So we had a bright future. Kumo twist was bullish, okay? And let me put the rest of these indicators on this chart so that you guys could understand what I'm showing here. So we want to put the Tenkan-sen here, and we want to put the Chiku span here. I already know what it looks like, so I don't keep it on my chart, but we had the TK crossover here, which was bullish. It's a weak crossover because it's below the cloud, and it's a bullish crossover. Bullish crossover, to be strong, has to be up here in bullish territory. I've gone over that so many times in other videos, so we won't get into that. All right, and then Chiku span is above price. That's bullish. Now you know that We had this breakout here, so now price retraced. Price retraced right down to the Kijinsen. This is the level of equilibrium. This is where price is going to usually retrace. You can see where price was moving down here, bounced off of the Kijinsen, moves down, breaks the Kijinsen, comes back. It likes to stay near this Kijinsen. If it gets too far away from Kijinsen, it likes to pull back near that Kijinsen at least. And here you see a big pintail right at the Kijinsen. So now what we're going to look for here is we're going to look for price to close above the cloud, basically because we have this pin bar here showing that we have support at this Kijinsen level. Now we have a current candle that is still bearish, so we'd like to see price close above this Kijinsen, above this Kumo. It'll represent another Kumo breakout because price is inside the Kumo now. So basically if we get outside the Kumo, close above the Kumo, we have a Kumo breakout. We can trade that Kumo breakout, take the trade, and put your stop loss below the Kumo, below the Kijinsen here. All right, so you have a Kumo breakout, price closes above this level here where this Kumo is, closes above, you take the trade, stop loss at this level. Now you have to determine if it's a good trade for you by the risk reward, not basically your risk reward, but your risk. You always know your risk, you never know your reward. You know what you're hoping for, but you always do know your risk right off the bat of a trade. So if the risk is too much for your management, then you don't take that trade. All good trades aren't good trades. That means that a good trade or a good setup might not be a good trade or setup for you because the risk is too big. The risk is what you're risking as far as your stop loss. Okay? So when you have this stop loss, you want to make sure when price closes above this level, you can put your stop loss at the Kijinsen or you could put it at the bottom of the cloud. I wouldn't recommend putting it at the top if you close above this level because price can retrace back to this cloud again, take you out and then continue higher. So you have a breakout here, waiting for a breakout now because you're showing, like I said, support with this pintail. So we'll wait and see what happens here. So that's EuroCAD 4-hour time frame. Let's go to the pound New Zealand dollar. And currently pound New Zealand dollar is bearish and we don't have a trade set up right now. We're waiting to see if price can get on the other side of the Kumo. That'll be a Kumo breakout, but you need your future to be bright. The future is really dark right now. The way I can tell my future is bright by the change of color. When I see the change of color to blue, I know that's a bright future. You can see when it's bright, price is moving higher. You can see when it's dark, price is moving lower. So you want to have that bright future, which is also known as the Kumo twist. All right, that's what I call it, a bright future here. And if I have a bright future, I can take a breakout trade. If I don't have a bright future, I'm not taking that breakout trade. So we'll see what price does here if we could get a crossover here. And then we'll get a Kumo breakout. Now, if we get a Kumo breakout, we want to be aware of this level here. This is going to be our daily Kijinsen level. So we'll go to the daily. So all we're looking at is a pullback, maybe, to this level. Now from here to that level, that's over 200, almost 250 pips. Okay, so when you get into the trade here, go back to the 4-hour time frame. If you get a breakout, it can be possibly a 200 pip trade up to this level, and then this would be the level where you want to watch out for because all this is really a retracement on the daily time frame. All right, so this would be, you don't really have no real trend direction here, not much. Okay, so what you're looking at is, yeah, price moved down and then price is retracing. So the trend here, price moved down, then you have a retrace. The retrace could come up to this Kijinsen level because that's a level where we always look for price to move back to. So on the daily time frame, price may move back to that level. Now again, you have support and resistance levels for the Ichimoku system. Here's one of them, your Kijinsen, your Tenkan-sen, then your Kijinsen, then your Kumo bottom, your Kumo top. Price could retrace to this level. It could retrace here, here, and here. When you're trading Ichimoku, what you look for these levels as trading opportunities. These are levels where you want to look for price to retrace back to, and you take a bounce off of these levels. All right, so I never get into a trade until it gets to my level. It's just like buying a car. If you go to the car dealer and they're trying to sell you, you want a BMW that's used, and you're trying to buy it for 20,000 and he's trying to sell it to you for 27,000, you don't buy it for 27,000, you buy it for 20,000. Maybe you can negotiate and get it for 21,000. But you're not going to buy it for 25 if you want it for 21, right? That's the same thing here with this trading. I want to buy it here, or sell it here rather, and I want to sell it here. I want to sell it here or sell it here. I have my levels where I want to trade. That's what I'm going to take. I'm not going to take what the market gives me. I'm going to take what I want. So I have to wait for the market to get to my level before I get into a trade. Other than that, I'm sitting with my hands on my knees. All right, so that's pound New Zealand dollar daily time frame. Let's go back to the 4 hour. Here's the retracement level on the daily. We're already at one of the retracement levels, the Tinkinson. So if I go back to my 4 hour, so we're planning the trade. We're pre-planning our trade. So if we do get a breakout here, we need that twist, and we know that this is going to be our level where we look for to take probably most of our profit, because this is going to be a strong resistance level. Okay. So that's just pre-planning your trade, looking at levels where you want to take your trade. Finally, we have our last trade that we're going to look at. It's going to be the Cad Swiss Franc. Again, you could see price was moving higher. Then we got a little pullback here. Looked like maybe the start of a trend. Now, there's a lot of ways that I look at starts of trends. I use fractals to look at a start of a trend. All trends start and begin with a fractal. This trend started with this fractal. It might have ended here with this fractal and begins a new trend with this fractal. Okay, so fractals are very important in my trading. I trade fractal levels, I trade fractal breaks, a whole bunch of different things. So we're not going to get deep into that right now. But also looking at this trade looks much like the other trade where I showed you the price bouncing off of the Kijinsen here, or the Kumo cloud. So we have a Kijinsen bounce here or a Kumo bounce here, and we have a nice big pintail here representing that the bears have pushed this price down. So we want to trade this resistance level. So now price is inside the cloud again. So we can basically again trade a Kumo breakout. Price is in the cloud. When it closes outside of the cloud, we trade that level. We could put our stop loss above this Kumo here or above the Kijinsen once price closes below this cloud again. All right, and we already have all of our signals. We have a bearish future. Okay, we can see the change of color. So our future is bearish. We do have a bearish TK crossover. I'll put it on the chart so you guys can see it. Okay, so here's your bearish crossover here. Bearish TK crossover. And Chico spans below price, that's bearish. All right, now I don't worry about the cloud being resistance for Chico span. I just am aware of that kind of stuff, but I want to make sure that price gets through that level. I mean that Chico span gets through that level, because that can be a barrier for us and hold up our trade. Okay, so now looking here, being that price is inside this cloud, now if we close outside of the cloud, we take the trade where we close and we just ride this short, and our risk is minimal because you can see where we have our stop losses depending on how far down this closes. Okay, so you'll look at that trade and you'll decide if you want to take that trade based off of where price closes and where you're going to place your stop loss. That'll determine your risk, and that'll determine if it's a good trade for you and if you want to even take that trade. All right, traders, so that's pretty much the trades that we're looking at today. Let's look at this the forum here. This is a free forum. You could come here, you could see some of the things that we post. I post a lot of the trade setups in here, and then just a lot of things that we talk about here. It's really nice forum. You could see pretty much set up here all the things that we have, and then our course is down here. So that's the forum. If you want to come and join that, you could come and join our Ichimoku forum, and it's free. You don't have to pay anything for that. Okay, now if you want to get even deeper, you could join our Ichimoku home video course. All you have to do is go to this link at fx@oneglance.com, and when you get on the home page, you just click this link and sign up for the Ichimoku home video course. All right, but That's going to be it, traders. I'm going to end now, and hopefully I'm a blessing to somebody and this is helping somebody. So until the next video.